one can only say that after trading has closed for the day, and you have to look at the median price, and you can see that according to this analysis, that median price is still below the 80-day FLD. Okay, of course I'm splitting hairs. It's right at the 80-day FLD. But the point is, it's not a clear cross. Okay, price hasn't surged through that that 80-day FLD. We don't know what's going to happen today. If prices move up today, or in fact, even if they pretty much stay at the levels they were at yesterday, or no, they need to move up a little bit. So if they move up a little bit today, then of course price will have crossed that 80-day FLD. So price has not yet crossed the 80-day FLD. So therefore, we do still not have confirmation that the trough on the 4th of June is of magnitude any greater than the 40-day cycle according to the FLD. Now, let's have a look at the other cyclic tool on this chart, and let's plot the 40-day FLD. There isn't a 40-day FLD, so that provides us with no information. Let's go back to the alternate analysis, and here it is, and let's zoom in a little bit, and let's have a look at the FLDs on this chart. Now, let's zoom in a little bit more. Now, I've zoomed in so that you can see in really clear detail what has actually happened to price relative to this FLD, and I think that you will notice that. And let me turn on this whiteboard. I'm having many problems with my mouse today. There we go. You'll notice that in fact median price yesterday did cross above that 80-day FLD. And in my conversation with the Sentient Trader user I spoke to, who was saying, oh, price has crossed above the 80-day FLD, on the chart I was looking at it hadn't, and the chart that he was looking at it had. Why is that? Well, because that 80-day FLD was at a slightly different level. How is that possible? Well, of course, you must remember that FLDs are plotted on the basis of the analysis, okay? And they are generated by very simply transposing the median price to the right by half the average wavelength of the cycle in question. So when you have two different analyses, the average wavelength of a particular cycle over recent periods of time will be slightly different in your different analyses. Okay, so therefore your FLD will be at a slightly different level. Usually, it's not a critical problem, and there's a very small difference, as I think you can see. But as it happened yesterday, provided us with the perfect opportunity to notice this difference, because yesterday that median price did in fact cross up above the FLD, but only just. And in the analysis, it didn't. But again, it only just didn't, because the level of the FLDs are very, very close to one another. Which is why I believe that when price crosses an FLD, when it only just squeezes up above the FLD as it did yesterday, you shouldn't immediately be making saying, okay, well, that's really meaningful, because it is not yet really meaningful. Hurst recommended that when you're using FLDs based on the median price, you should always use them as delayed action signals. So, in other words, yesterday, according to this analysis, crossed up above that FLD, and therefore you should not have traded at that point. We're looking at the median FLD here. You should not have traded at that point. You shouldn't be making a delayed trading decision. What is a delayed trading decision? You enter trading orders for the next day at a little distance above the high of the day on which the median price crossed the FLD. Why do you do that? Because you must see some follow through. Okay, it's very possible the price will sneak up above the FLD and then drop down. And when you look back at it, you'll say, well, that wasn't a real, genuine price cross. Okay, so if you're going to make a trading decision, of course, you want price to follow through on the price cross of the FLD, and you want it to keep moving up. Okay, that's the first thing to point out about price crossing this FLD. We get very used to talking very glibly about price crossing FLD, pricing ETLs, and we speak very glibly about it, but there are lots of subtleties that it's very useful to bear in mind. The other thing that I would like to point out about this particular analysis, okay, I've pretty much forced Sentient Trader to analyze the markets in this way, as you can see by these pins which are displayed at the foot of the chart near the analysis. Okay, these pins very simply remind me. You can see some pins over there and there. They remind me that I am influencing this analysis. I'm telling Sentient Trader, that's what I think might be happening. And it means that as an expert, or even as a beginner Hurst analyst, you can influence the analysis Sentient Trader performs for you, and you can make decisions according to your expert opinion, or even your beginner's opinion, and make trading decisions on the basis of that. What I was going to say is that this analysis is being, Sentient Trader is being forced to produce this analysis for me. And in fact, there is something in this analysis which, as of yesterday, produces a dilemma. Okay? And let me show it to you. Okay, I forced Sentient Trader to produce this analysis because I do still believe it is a possible alternate that might be happening in the Nasdaq. Why is that? Because price hasn't dropped down below the 40-week cycle FLD. You see that? There's the 40-week cycle FLD. Price has been sort of merrily riding up along that FLD. It hasn't dropped below it. And we're speaking about the formation of a 40-week cycle trough on the 4th of June, and if markets were behaved, the price should have fallen below the 40-week cycle FLD in order to create that trough. Okay, but so therefore, this is a possible alternative to what might be happening. But I wonder whether you can see the dilemma that is now occurring in this analysis. I'm just going to point it out to you anyway, rather than sitting waiting for you to spot it, just in case you've all fallen asleep in the North American heat. The dilemma is this. I have forced a Sentient Trader to call this trough on the 4th of June a trough of the 40-day cycle, as you can see over there. Yesterday, price crossed above the above the 80-day cycle FLD. Now, of course, as I mentioned, it wasn't a very convincing price cross of the 80-day FLD. Okay, price squeezed over that FLD, and it wasn't very convincing at all. But nevertheless, median price did cross above that FLD. When price crosses above an FLD, theoretically, if we were speaking about an ideal market, theoretically, that means that the prior most prominent trough in price must be a trough of at least 80-day magnitude. So there is your dilemma. Price crossed above the 80-day FLD, meaning that this trough here on the 4th of June must be of at least 80-day magnitude. However, in the analysis is showing us that the trough is only of 40-day magnitude. There is the dilemma. Okay, why is Sentient Trader still persisting in doing this? Because in version 3 of Sentient Trader, you're able to force Sentient Trader to your will by pinning troughs, and you will actually get it to ignore its better instincts and to keep presenting that as a trough of 40-day magnitude. And of course, if price today in today's market suddenly drops down again, and the median price does not remain above that 80-day FLD, then in fact the price cross of the 80-day FLD might turn out to be a false price cross. Okay, and so I see a question. I'll get to it in a moment. So it is possible that this this analysis is still valid. Because you must remember, markets are not perfect. And yes, price did cross above that FLD, but it was such a small little price cross that I'm willing to accept that it wasn't a genuine price cross. The other thing to bear in mind is that, of course, if the analysis is wrong, then the FLD would be better placed at a slightly different level. As we saw a moment ago in the other analysis, the FLD was at a slightly higher level. So, in fact, price has not yet crossed that 80-day FLD according to the alternative analysis. Okay. A very interesting thing happens when you force Sentient Trader to do this kind of thing, to produce an analysis that's not quite perfect. That is that you will end up having to compromise somewhere. And in this particular chart, there are two possible compromises. And let me show you what those two possible compromises are. Either we must accept that this FLD cross here is not genuine, and the FLD level is wrong, or in fact price hasn't really quite crossed, or the markets aren't ideal. So either we need to ignore that, or we need to accept that a 40-week cycle, if a 40-week cycle trough has formed not below the 40-week cycle FLD. So one of those two sort of imperfections in this analysis need to be accepted in order for us to move on. Those two things must have happened at this particular point in time. And so you'll often find at moments when you can't choose between one analysis and another, there is always a very simple sort of way of choosing it. You, as the analyst, need to look at the chart and you need to say, yes, okay, I think that price cross is not true, or I think perhaps the 40-week cycle trough has formed, one thing or the other. Let me get to that question. Steve says, the 80-day seems well overdue if it's only just crossed its FLD. Let's have a look at that. And I think actually maybe that question relates to the question I was emailed, which I might answer. Right. So you're saying that the 80-day cycle must be very overdue if it is only just crossing its FLD. Well, what's happening in this particular analysis is that the 80-day cycle is not overdue, because I've forced the analysis into something that is uncomfortable, and we have some dilemmas in what is actually happening. Then you can see that, in fact, where I have positioned the 80-day cycle trough, that's right. I'm saying it's not a true cross, but let me just finish that sentence. Where I have positioned that 80-day cycle trough is below the 80-day cycle FLD. Okay, but now strictly according to Hurst's guidelines, when price crosses an FLD, it's confirmation that a trough of the 80-day cycle has formed. But the next part of that sentence is that the trough that is confirmed is the lowest price within the last half cycle period. So in fact, it's saying that should be the trough of the 80-day cycle, not this one over here. Okay, so I hope that answers that question. Now, I'd like to move on talking about this 80-day FLD and what might be happening in the Nasdaq. I'd like to move on and answer